Welcome to Module 3, Section 9, where I will talk about the topic of blue chip stocks. Quite often, we hear the term blue chip stocks, and the stock market and all the financial markets are famous for having their little sayings, as well as acronyms and different meanings. Well, if you don't really understand what somebody is saying, that can be rather confusing. One of those might be blue chip stocks. For those of you that have ever played poker, the blue chips usually have the most value. About 100 years ago, somebody came up with the idea, blue chips have the most value. Why don't we start calling stocks blue chips? It can be perceived as a form of gambling, just like poker. Stocks that are considered to be the best quality are called blue chip stocks. This includes a lot of stocks that are on the DJX or the Dow, the NDX or NASDAQ 100, and the SPX or the S&P 500. One thing that you'll notice about the stocks I'm going to list is these stocks are on all three of these indexes. The first one is Apple, symbol AAPL. The next stock is Cisco Systems, and you might not be as familiar with that. They build routers and switches for computer networks. They're based near San Francisco, so that's where they get their name from. There's Intel, the big computer chip maker, and Microsoft. And if I remember right, I think Intel and Microsoft were the first two NASDAQ stocks to ever be included in the Dow Jones Industrial Average. Up until the late 90s, only NYSE stocks could be included in the Dow. Well, because of the explosive growth of technology and the importance that it has, the editors of the Wall Street Journal who decide what components make up the Dow got together and decided, we better include some pretty important stocks, even though they don't trade on the New York Stock Exchange. There are also stocks that make up other indexes as well, such as the NASDAQ 100 and S&P 500. They're not included in the Dow, but they're included in these other indexes. This includes Amazon, and a lot of people have to wonder, are they going to put Amazon into the Dow? We'll have to wait and see what the Wall Street Journal editors or the board that gets together to make these decisions actually comes up with. And then another company is Google, and there are two types of Google stock. There's symbol GOOGL and GOOG, Class A and Class C shares. So just to give you some examples of what these stocks look like, and I don't have any extra studies on these charts. This is just a bar chart of prices going back about 2 years. So we have the whole COVID plunge that was involved, and you'll see that in pretty much all of these stocks. That took the entire stock market by surprise and sent everything down. Then we had that V bounce up out of that. And a lot of the stocks really started to prove themselves in different ways as we went through the whole lockdown. And as I record this, now there are concerns about another lockdown coming. Then we also have Cisco Systems. It got hit back during the COVID plunge, made a nice recovery. And then if you see a lot of gaps on these charts, that's usually when earnings reports come out. And we never know. It's pretty much a crapshoot at that point. Do we know, is the stock going to behave in a good way, positive way by going higher, or is it going to go down after that? There are a lot of different ways to interpret this. Sometimes good news is seen as good news and prices go higher. Other times, there might be a little disappointment in the report and that will send prices lower. There's also the buy the rumor and sell the news going on, where prices may run up into an earnings report. The report comes out, everybody's happy, but then the stock takes a dive. Then another stock here is Intel. You can also see lots of gaps. This is one reason why personally I don't invest in individual stocks. I focus on an index. Now it's true, an index that has an ETF, such as the SPY, which I'll talk a little bit more about later, there can be gaps. There's a big time lag. And by the time prices open the next day, there could be a big difference between one day's close and the next day's open. But the gyrations that you see during earnings and the reasoning behind it, it just makes it too risky for me personally. That's why I focus on something bigger like the S&P 500. Then, of course, Microsoft doesn't have as many gaps. It's stood the test of time and is really considered to be the benchmark when it comes to technology companies. Yes, there's Apple. Yes, there's Google. But as far as being a mature stock, Microsoft has really been around longer. I think it was 1985 when Microsoft went public. There's also Amazon, and not as many gaps on this chart. This was one of the stocks that really was able to shine during the whole lockdown because people are at home. They can't go to work. They can't go anywhere. They can't get together with family and friends. So what do? They might order something from Amazon or watch a movie using Amazon Prime. Amazon really stood up well. And in fact, as I record this, it was just about 12 hours ago that Jeff Bezos made his successful launch into space that lasted all of about 10 minutes. So another billionaire has blasted off. The chart that you see in front of you is Google Class A, and this stock does have voting rights attached to it. Back in 2014, Google got a little bit concerned that somebody may try to buy up all their shares and have a majority control of ownership in the company. So they decided to create a Class A set of shares and a Class C set of shares where you can vote if you purchase the Class A shares. You cannot vote if you own the Class C shares. And here's the Class C. And their symbols are different. Which one's better? I don't know. I follow them both. I don't invest in them personally. I just invest in them indirectly through the indexes. There are other blue chip stocks other than the ones that I've just talked about. I ran across an article recently in US News and World Report where they came out with this list back in December of 2020 of the best 10 blue chip stocks. And I'm going to go through and list those. I'm not making a recommendation about any of these stocks. I'm just trying to expose you to what blue chip stocks are and the stocks that make up the list of what is considered to be the best. So based on personal experience, this list is a pretty good representation. Some of these companies are very famous and household names. Some of them you may not know all that much about. Also, right here, I have the link to that article, and I'll also include this in the description below the video. So here's the list, and then after this, I'll have charts that I show you. Johnson & Johnson came out number 1. Berkshire Hathaway, Warren Buffett's company. JPMorgan Chase & Company, big banking conglomerate. 3M, or Minnesota Mining and Manufacturing, their slogan used to be, we don't make a lot of the products that you use, we make a lot of the products that you use better. And then there's AbbVie, big pharmaceutical company, the Disney company, which is kind of interesting because they're included in the Dow Jones Industrial Average. And other than building theme parks all over the world, Disney isn't really an industrial company. The Dow has really come to mean what represents America the most. There used to be a lot of car companies in the Dow. It's not that way anymore. Now you have a lot of high-tech, finance, and service companies that are included. Then, of course, AT&T, or we like to call it Ma Bell, Procter & Gamble, Lowe's, big home improvement company, and Cigna. So let's look at this first chart. Johnson & Johnson got hit during the COVID plunge, and that's pretty much going to be true with all of the charts that we see, but it stood up pretty well. And as the market has been rebounding, Johnson & Johnson has done very well in spite of that. Then we have Berkshire Hathaway. A lot of people think this is the best stock in existence because Warren Buffett is the smartest stock investor there is. There are lots of books written about him. He's a person that's well worth studying. Whether you try to emulate him or not, I don't know if that's even really possible. Yeah, you can take some practices and theories that Warren Buffett uses, but you didn't start off with hundreds of millions of dollars to invest with in the first place. I don't know, if you're listening to this, maybe you did, but chances are you don't have that kind of money, so you can automatically diversify right off the bat. Having access to a lot of money also gives you access to a lot of people. He can go in and tour the plants. He can get to know the managers. If he calls them up, they always accept his phone call. If you or I tried to call up some of these companies, they're like, well, I don't have time to talk to this person. So emulating Warren Buffett might be a good idea, but maybe not very realistic. Nonetheless, his stock is worth following. His annual report that he comes out with is very worth following, and people just wait with bated breath to read that. It's things that have already happened, but you can learn a lot of the philosophy, and I would highly recommend that. Then JPMorgan Chase, used to be two separate companies, now they're combined into one. They got hit as well, and you can see some gaps as earnings came out, but they've been performing up into 2021 very well. 3M also performing quite well as we go through this. And again, I have no moving averages. I don't have any indicators or any kind of studies placed on this. I just wanted you to see a bar chart with prices along the top and then volume along the bottom. And then AbbVie, it's been doing really well lately. And the Disney company, they got hit pretty hard because their parks were closed down. But my understanding is the last time that Disney shut down one of their parks, and at that time it was Disneyland, that was all that existed, it was when JFK was assassinated, and that was for one day. Well, now they have parks all over the world, and all of those got shut down. They did launch Disney Plus, and that's been very successful for them, but there's a lot of changes going on in Disney. If you study Walt Disney himself and the company that he built, and he's one of my favorite people to study, if you take the philosophy that's in the Disney company now, you may not see a lot of correlation between the two. But still, they put out good movies, they have great parks, they have great music, and they've been a real mainstay as far as creating this idea of American culture and Americana. AT&T, for the longest time, they were the phone company. They were broke up back in the 80s. Then you had all the baby bells spin off of that. Well, now that we have switched how long distance is charged and we have smartphones, you can place calls all over the US and all over the world, and we don't have the expenses that we used to have when it came to communication. AT&T, not the blockbuster company that it used to be, but still very important. The interesting thing that I always found about AT&T is we had fax technology, we had modems, we had the ability to transfer data over phone lines a long time ago. But since AT&T monopolized everything, they're like, why are we going to spend all this money bringing out new products? We don't need to. We're making plenty of money just the way things are. And that was used as part of the justification for breaking up AT&T. Because after that, what happened? You had phones that were $10. You had caller ID. You had call waiting. You could conference call. We had fax machines hit the market. We had modems. We had the ability to connect with other people all over the world. All that technology had already existed before. It's just AT&T decided not to unleash it on the world. From a consumer aspect, that really did a lot of good for people. From an investment standpoint, maybe not so much. Then Procter & Gamble, real mainstay as far as American stocks are concerned. Then Lowe's, big home improvement company. A lot of people during the lockdown, they had some extra time on their hands, so they'd run down to Lowe's or Home Depot and pick up some materials and do some remodeling at their homes or do some projects that they wanted to do. What's interesting about this is Lowe's also sells a lot of lumber, and lumber really shot up during the COVID lockdown. It's really fallen back now. Then Cigna, the last chart that I'll show you for blue chips. Interesting company, been around a long time, and has really done quite well after the COVID plunge. If you want to be exposed to a possible alternative, there are other choices that you can make. Investing in blue chip stocks can be very wise and produce solid returns over the long term. The idea, you get what you pay for. If you want a quality investment, you're going to have to invest in a quality company. My personal opinion is you can take that even farther and get even more quality while still having lots of diversification at the same time. Another consideration is to invest in ETFs or mutual funds that are based on broad indexes such as the S&P 500. I think that's a better choice. Some people say, that's boring. I want the excitement. Well, go to the Forex market. Go to the cryptocurrencies. You'll have lots of action there if that's what you live for. Go to your casino. Go to Las Vegas. I don't approach investing as gambling. A lot of people do, and a lot of people may say that they're investors when really they are gambling. But I have charts here of two ETFs that may interest you, specifically the first one. Very popular S&P 500 ETFs include the SPY, which are the spiders, and the IVV. It's big and it's popular, but not as popular as the SPY. So here's the spiders, and this is what I'd spend most of my time looking at, analyzing, commentating about, predicting, doing whatever I can to get insight. The nice thing about dealing with something like the SPY is it's attached to the S&P 500. There's supposed to be a one-to-one relationship between the two. So they're supposed to move in lockstep with each other. The nice thing about studying an index is we have a tremendous amount of information that's given off by the indexes that we can study, things that we don't see with individual stocks. And I have other videos that talk about that. Also, there's criteria that's built into the S&P 500. And watch my video where I talk about the best stock tip you'll ever receive. That's where I bring up the SPY and I give my reasons for why that is such a solid investment. Then the other ETF that you may want to look at is the IBBV. It's popular, but the volume just isn't there. And if you want the added opportunity of using additional strategies where maybe you do some hedging or you want to produce some income or you want to trade some more complicated option strategies, you don't necessarily want to base it on the IBBV. You want to base it on the SPY, and some people base it on SPX options. The idea is to have plenty of liquidity. You want to be able to get in and get out quickly, and I have another video where I talk about that. This concludes Module 3, Section 9, and I will pick things up again in Section 10.